All right.
But there's also law of averages, which may spoil the party, but yes.
Now, so global cues could be one of them, Samina. You're absolutely right. And, we'll take you through what happened on Friday close. So a hotter than expected wholesale inflation data seems to be something that could spoil the mood. And you saw a 5-week winning streak being snapped on Wall Street. The Dow was nearly 100 points down because of this. So a couple of things have happened. This PPI data that has come in Jan was 0.3%. The expectation was 0.1%. And when you look at the core data from that larger set, which excludes food and energy, that's up 0.5% versus an estimate of 0.1%. So that has investors a little worried. You saw that panning out in the yields as well. The U.S. Treasury firming up at 1 point over 4.3%, though it's settled a little tad lower than that, about 4.28%. And that's largely not great news if, you're looking for foreign flows to come in with hardening yields. On the other end, if you look at what's happening with crude, while the cues are negative and point to pressure on crude, prices are holding fairly steady. There's been fresh strikes in 5 locations by the U.S. on Houthi areas in Yemen. You've had Israel escalating in Lebanon. So all of that is there in the background, but crude prices have been inching up slowly overall. You've not seen a big shoot up. Asia, let's just take a look at how Asia is doing. And remember, China starts trade after about a week's holiday for the lunar year. And yeah, Asia is largely mixed. Shanghai slightly up in the red. So mixed cues there coming in as far as global is concerned. But I was talking about flows and the kind of flows that we have been seeing. And this is clearly a market which is being pushed by domestic investors. While on Friday you had some buying from FIIs, but if you pull up the figures for the month of Feb, FIIs have largely been sellers, and in the range of about 13,000 crores odd in the month of Feb so far, while DIIs have been buying about 18,000 crore rupees in the month of Feb. So it is the domestic investors coming in. The question is, will foreign investors also come in? What are the next cues now that result season is over? And that really is the question, isn't it, Agam? Does it all move to pre-poll action now, or will we see sort of another range-bound week?
No, it's going to be quiet when it comes to, well, of course, earnings are behind us, but it does seem like there's some consolidation on the cards. But Friday was the first time since about, 3 or 4 days before that, where we saw about, the Nifty move about 22,000. But it was also the 5th time since 15th of January that it, in fact, tried and test the 22,000 mark. The real question now is whether or not it manages to sustain about 22,000. And if it does, of course, a lot of things will change. Perhaps you will start seeing a lot more people, put on bullish positions at this point in time. And it is the same for the Bank Nifty, by the way, because for the Bank Nifty, while it is nowhere close to its, life highs, it is about 46,000, which has been a little bit of a pivot off late over the last few weeks. And once again, Bank Nifty's sustaining above that mark of 46,000 is going to be important. That is when perhaps, a lot of these traders will change their positions. We also have to remember that HDFC Bank has a tremendous weighing on the Bank Nifty, and that's largely one of the reasons why we have seen so much weakness. In terms of the other technical factors, coming down to the Nifty specifically, at the moment, what has been very interesting is that the maximum open interest in puts has moved from 21,700 to 22,000, which means that we are likely to see at least some amount of support as far as the Nifty is concerned around the mark where it is. And, I won't be too surprised if a lot of traders, in fact, go ahead and already initiate long positions, keeping 22,000 or perhaps 21,900 as a little bit of, a support, because we have clearly the risk reward, which will be in favor of the longs at the moment. And on the higher end, remember, it's all the way up to 22,600 where we're seeing max OI coming through. So we'll be watching out for that. In terms of several other factors, your index futures coming in at around 38% for FII's net longs. That is nowhere close to being hot. And as far as your Nifty put call ratio is concerned, that also stands at around 1.22. Once again, it's nowhere close to overheating as far as those indicators go. So at the moment, it does seem like the environment, at least the technical parameters are indicating positive stance. The feel is much better at the moment.
It is, but a couple of things I think fundamental investors now, Agam, will want to keep in mind is the fact that crude trades at 11-month high.
Yeah.
So it's again going back into territories of $83 a barrel, which is what we've not seen for a very long time.
Yeah.
Apart from that, okay, of course, global cues are going to be missing from the U.S. because the U.S. is shut today on back of President's Day. But it'd be important to see why, of course, it was hotter than expected inflation. The reason for the correction is what the markets may be slightly disappointed about. But those are things that could fundamentally play out negatively for us in the medium term. More importantly, today, I think I do have a feeling that it could be a positive start and some sort of consolidation in the second half, largely because it's law of averages, right? You've had 3 strong days of trade. You've had higher highs being made by the Nifty consecutively. Bank Nifty also closed very close to its previous highs. So lots of positive triggers like Agam mentioned, but it could just simply be bulls taking some profit off the table that cannot be ruled out this morning. That is on the broader market front. Talking about stocks, once again, lots of stocks and sectors will be in focus. We'll highlight a few for you and then talk about the sectors that participated, stocks that actually moved out really well. And talking about that, insurance had a pretty solid catch-up on Friday's trade. It was a catch-up rally. You had stocks from mid-cap pharma that really did quite well. Those could be in focus this morning. Aviation could come back in focus again. IT may continue to look good. So fortunately, the stock-specific action in sectors that actually did pretty well on Friday itself. So follow-up buying cannot be ruled out this morning. But take you through what's happening. Some of these counters were already in the news on Friday, but will continue to remain in focus this morning as the news pipeline built up on the weekend. SpiceJet is one such counter. They, along with BusyBee, have submitted a bid to acquire Crisis Headco First Airline. They do believe synergies between the two carriers could lead to improved cost management and revenue growth. Remember, SpiceJet currently itself is underway fixing its own house. They've recently raised the first tranche of capital infusion to the tune of 744 crores. They're also in the process of raising additional 1,000 crores. They also did have an approval in place from your shareholders for a 2,500 crore via fundraising via QIP. Now, all this could be in the works, and hence the management has got approvals for these very aggressive fundraising plans for SpiceJet. Well, so watch out for this one. It's going to be another big mover in today's day of trade. Dr. Reddy's and Novartis. Now, this is definitely worth a mention. Remember, in Feb 2022, Dr. Novartis had transferred some of its businesses to Dr. Reddy's, including its exclusive sales and distribution agreement. What we have heard over the weekend is that Novartis AG, which is a Swiss-based company, is looking to offload its nearly 71% stake in its Indian arm. And Dr. Reddy's is the front runner for this. Of course, we did write to Dr. Reddy's. They couldn't confirm that or deny that, and that's important to note. Novartis India's top line as of last quarter stood close to 380 crores, and their market cap is about 2,556 crores. Dr. Reddy's, remember, is sitting on a very heavy cash balance, so a lot of this expansion and acquisition will be funded by cash accruals or internal accruals on that note. So both these counters to watch out for in trade. Along with that, smaller but always a mover, it's Balrampur Chini. They've announced that they are going to manufacture polylactic acid, which is used in the manufacturing of bioplastics. Management believes that this is going to be the next leg of growth on back of very strong demand from the industry. They've got fundraising plans approved as well in place. The deal will be funded through debt and internal accruals. So that's largely the 3 counters that are on my radar. There are a few that Agam also has, which is largely on block deals that we'll talk about, like data patterns. But Tamanna, you've got a few as well.
Yeah, I think one stock definitely to watch out for this morning is going to be 197. Never ceases to be out of the news, and so much action there on a Friday during market hours and after as well. So a couple of things have happened. The RBI put its list of FAQs on what its action against Paytm Payments Bank means, what it means for the core Paytm business users, etc. Axis Bank turned out to be the knight in shining armor for now. We'll take over 197's nodal accounts. That means at least there is some relief for merchants, etc., even after March 15th. That was the other piece of news, that instead of the end of this month, the deadline to sort of cease all operations in Paytm Payments Bank is moved to March 15th. Now, a couple of interesting notes out this morning. One of them is Bernstein's, and we're going to be speaking with Bernstein's in a bit from now, that rates Paytm and outperform with a target price of 600. They've also said that RBI's actions seem to be limited to Payments Bank and are not intended at disrupting the UPI and other functions of Paytm. They see RBI's hint at merchants being able to use the QR code soundbox as positive. And this is important because in the FAQs, the RBI made it clear that those functions, the soundbox, etc., will continue. The cutoff date has also been extended, which is being seen as a positive, and no exception for bulk transfer to another bank. Citi, meanwhile, has maintained a sell with a target price of 550. They expect Paytm to announce more banking relationships after Axis, so that's the next trigger. It says Paytm to see impact on app traffic and elevated user churn. So while there are some sort of positive cues on that, the other question really is what the FAQs are telling you, because the RBI is very clearly advising users to move their FASTag and other operations out of Paytm. So we'll have to wait and see how the stock reacts. But that's definitely one that is going to see some gyrations today in trade. LIC is the other one we should talk about, and this is something NDTV Profit had reported earlier. LIC has put it out in the public domain. Quite a sizable tax refund that the insurer has got, about 21,740 crores. It's for the assessment years FY13 to FY20, and they've also launched a new product. So LIC anyway has been a hot favorite and could turn out to be the stock of the year as far as a few analysts are concerned. So that's one that could see some movement today. Tata Power is the other one. They've got a letter of intent from REC to acquire the Jalpura Khurja power transmission project for about 838 crores. Few more counters, but I'll come back to them after Agam has, his list out.
Yeah, very quickly, I want to talk about Paytm because I'm not going to rule out a 5% upper circuit this morning. There's a high chance that's going to happen because it was already on an upper circuit last Friday. And given the fact that it's just a 5% circuit now, there's a higher probability that it could in fact end up there. That said, a couple of more counters in focus. We are also keeping an eye on something like data patterns. Now, we've had some, change of hands there. At least the private equity player Florentry has sold a little over 10% stake in data patterns. And interestingly, we have a bunch of other institutions who have bought into it. So government of Singapore has bought about 5.6% in the company. Mirae AMC has bought up nearly 2%, and Kotak Mahindra Mutual Fund has also bought nearly 1%. Along with them, an individual, Matthew Syriac, has also bought about 1.2% stake. And I believe, if I'm not mistaken, and this is something I need to ascertain, that Matthew Syriac is also associated with Florentry. Of course, that said, we are also keeping an eye on M&M, and that's at a life high, of course. Its futures were down across all series, open interest, that is, by as much as 7%. It doesn't necessarily mean that shorts were covered, because naturally we've seen a super up move as far as M&M is concerned. But do remember, at the moment, as far as M&M goes, its base now shifts to around 1750, because that used to be a little bit of a resistance of sorts, and it had been before we started seeing that sharp up move there. So we'll be watching out for M&M as well in today's day of trade.
In fact, quite a few other stocks that we need to talk about. And M&M is something, Samina, I know you're going to, come to in detail with Tushar and Editor's Cut. But before that, just a couple of more counters, because so much news over the weekend. And Quess is one we should address very quickly. So Quess Corp is going to demerge into 3 separate listed firms. These will be Quess Corp, Digitide Solutions, and Blue Spring. And there will be separate verticals, really, which will be seeing an unlocking of value. At least that's what the company says. So they will be handling workforce management via Quess, business process management, InsurTech and HR outsourcing versus Digitide, and facility management, industrial services and investments through Blue Spring. So Quest could have some interesting move there. NTPC Nalco is the other one. They've inked an agreement. NTPC has actually inked an agreement with Nalco to supply 1,200 megawatts of power for Nalco's Odisha ops. And a whole smattering of stocks really with some news.
Yeah, in fact, talking about Quest Corp, and this is very interesting because they are splitting it three ways. But if you look at the market cap of Quest Corp, it's 7,000 crores. So it's going to go into becoming a micro cap in every sense if you split this three ways, right? But another quick mention, CRISIL reported earnings. I'm just doing a little bit of justice to the end of the earnings season. Good set of numbers. They've reported a 16% growth on top line. Margins also look pretty good. Quarter on quarter also they've done quite well. Remember, it's a mid-cap name, so it will be again in focus this morning. You could see a movement on the upside on CRISIL as it would be, reacting to a solid set of numbers for themselves. Well, that's pretty much all the stocks that we have, but it's over to Alex. He's back, as always, on Editor's Cut this morning. Good morning, Alex.
Good morning, Samina, and good morning to the viewers as well. This is a story of one of the, if not the cheapest, large automotive original equipment manufacturers. We're talking about Mahindra and Mahindra today. It's an interesting play of both India's rural story through its farm equipment sector, its tractors, as well as India's love for the sport utility vehicle through its urban play, and the premiumization strategy that is at play in the automotive space. The question is, can it capitalize on the potential that it has, and will that reflect in the price? Indeed, in the end of last week, you saw the price run up very substantially, and despite that, we're talking about a very significant gap in valuations between Mahindra and Mahindra and its peers. So we're talking about the case right now, and I think the question that Tushar was asking is this Mahindra and Mahindra's moment in the sun, or is this going to be a case of sunburn? So let's lay the context first on the fundamentals, Samina, and then we'll go to valuations, if you'll allow me. How does it look right now? Because farm equipment is looking a little weak.
Yeah. So farm equipment, thank you, Alex. Good morning, Samina.
Good morning.
So the most important fact to look at M&M's farm business is that it's a cyclical business.
Sure.
Couple of years ago, tractor units were growing at 27% or something like that. It's down almost flat, and the company may end FY24 with tractor volumes at declining by about 5%. But the story here is not just about tractors. It's about the SUVs. That's because we have seen a run-up in the way SUVs are in demand in India.
Yeah.
So M&M, as per its Q3 earnings, it says it's the #1 company as far as revenue market share is concerned, not in absolute numbers. So it's not selling as many units.
That number is Maruti's.
That number is Maruti's. So what they're doing is they're getting the money, but they're not selling the units. They're also down on average selling price as compared to its peers, but it will still be the fastest growing because that's what the guidance that the company has given.
Right.
It will grow in the mid to high teens with the industry average seen at about 10 to 12%.
How are the margins on this business, Tushar?
So,
because while I know you'll get the numbers, what happens to margins?
So in margins, what happens is they want the premiumization to be in play. So essentially, they want the buyers to be spending on the Scorpios and the XUV 700s. But what the company has faced problems is that people have gone to the top end of the SUVs.
Yeah.
So while there may be numbers coming in a way, but that's not still reflecting in the margins.
It's actually an interesting conversation because if you look at the last decade and a half, Samina, and any time you've seen an instance where rural has underperformed, you've seen farm equipment sector do a little badly. Urban has taken the pie for...
and it's happening right now, Alex.
Absolutely.
Maybe not in the auto pack only, but everywhere else. So we'll talk about that tomorrow.
Yeah.
But be it FMCG, be it other sectors, like he said this morning, if rural doesn't do too well, urban jumps in to give the support.
That has worked for us, for our economy so far at least. So that helps for us. But... this is what I said, when it's the case of a sunburn or not, because it's an opportunity for M&M to squander. If you see your SUV is in so much demand, what M&M needs to do now is to actually get those products out. It's to get its product mix right.
So when are these product launches expected, Tushar, over the next couple of quarters?
Yeah, so by first quarter of next fiscal, that FY25, they want the 5-door Thar. Remember, the Thar is the product that brought back M&M 2 or 3 years ago. The company also has about 5 or 6 EVs in the pipeline. There is a refresh of this XUV 300 that is going to come in. So those products, the new product launches as we have seen, draws the volumes as well. So while the company wants to shore up its margins, it also is looking at building its absolute numbers as well. It wants to sell more. It wants to gain market share. So while, okay, we have the revenue market share, but we want the absolute market share, absolute market leadership as well.
So, but let's talk about valuations.
Yeah,
and
so
that's
I think, and I think it's interesting, right, Tushar and Alex, when you compare, so first let's look at Mahindra and Mahindra's recent rally. It's done an 8 to 9% up move in the last 2 days, post-earnings, and post the fact that they announced that deal with Volkswagen. So both those factors led the counter to lead the way up in the auto pack on Friday. Now, when you look at those numbers, it trades at close to 20 times its forward price to earnings. That, on the face of it, when compared to its peers, appears extremely cheap. But what you want to keep in mind, it appears expensive to its own historical average. So historically, M&M has traded at 14 times forward earnings. Now you're at 20 times forward earnings. So there's a huge gap in terms of a premium that it's currently trading at. So while I said it trades expensive compared to itself, but cheap as compared to its peers, now on the face of it, it looks cheap, right? Let's break this down. The reason it trades at a discount to its peers is because M&M, the whole company, only contributes to 30 to 40% of auto. There is some holding company, there is the NBFC arm, so there are a whole bunch of businesses that go into M&M, and the valuation hence doesn't look too fair. It looks, and the calculation is done on the SOTP basis. So I think the better way to look at this is, while it looks cheap, it's actually not cheap. It's not cheap as compared to itself, and I think that's what investors want to keep in mind. Also, what brokerages, and I want to come on this one because you know, when you and me spoke yesterday, we said, oh, brokerages seem so euphoric about M&M. But Tushar and Alex, you both will agree, while everyone has come out with a brokerage note pretty much immediately after the earnings came out on M&M, from your Nuvama to your Bernstein to CLSA, the whole list, everyone has increased the target price, but there hasn't been an aggressive upgrade on the counter. The max increase in target price stands at 18 to 20%, which after Friday's rally would be much lesser.
Much less enough.
So there's no aggressive upgrade. Let's not forget that. While we got very excited and trying to explain the move on Thursday, Friday to earnings and brokerages, they've only hiked their target price, and not so aggressively either. But yeah, you got to tell us what you made of those brokerage reports.
So, in a way, we saw the upside as about maximum that we saw was from, I think, Motilal also at 21%.
That's it, yeah.
That's it. And since you mentioned about the SOTP angle, that's the most important thing to see, that it's just not the auto business as far as Mahindra's valuation is concerned. They have to consider everything else as well. So essentially, what they have to now do is actually see how do they manage their order book, how do they manage their waiting periods. So if you
therefore the question is, where do the risks lie at this point, and is it in the price? So first, where do the risks lie, and then is it in the price?
The good news is in the price. That I can
promise. So
that's the
where
answer.
The risks lie is not delivering on the promise. So essentially, if you have a production capacity of 49,000 units, if you're sitting on an order book of about 2.25 lakh, that's the order book that the company is sitting on, and the waiting period, say for example for a Thar or a Scorpio, is still 1 year. So if you're not able to bring that substantially, so you will see highest cancellations coming forward. Secondly, M&M, and actually it's a very weird thing to bring up, especially when it's deal with Volkswagen, has actually underway now. So it'll bring up more EV components from Volkswagen for its EVs that are going to come in. So historically, M&M has, if for a better word, has bungled its alliances. M&M has had an alliance with Ford, M&M had an alliance with SsangYong for getting into, as well as with Kinetic for its two-wheeler business. So the history does not look good for M&M. So any delay or any gaps in this particular alliance will not bode well for M&M's EV business. Remember, 6 EVs that M&M has promised that will launch 6 electric SUVs in the next 18 months. Any delay and you'll have a Maruti coming in with its product in October. Tata will not give up on its advantage.
Which is a market leader
right now. So those risks remain.
And by the way, that list is much longer. You have Navistar, you have Renault, as we pointed out, you have the two-wheeler play that you mentioned, and there are several more. But what was the point that you were saying?
My very quick apprehension here is, while the big bet is PV, is EV, if we don't see a sharp rebound, there's no upside risk in tractor sales over the next couple of quarters. Will PV be able to support the kind of valuations M&M trades at this stage?
That's the sense that we're getting from brokerages.
Okay.
So Bernstein says that the valuations, current valuations, it is the SUV story that they say.
Yeah.
So it is now meaty enough to carry.
So historical past performance cannot be an indicator of future performance
it's
in the case of EV.
Indian car market itself is changing. So you have the SUV volumes
it's across businesses.
So it is, again, SUV is the driver, as what even brokerages are saying. Tractors may take a step back for some time because it's a cyclical business. If it performs very well, if it lays flat, then, I mean, okay, at least the SUV will still carry on.
So, we talked about Tata Motors a few weeks ago, and we talked about Maruti, and this morning we talked about M&M. The story for all three, clearly, in terms of future outlook, is EV. But if, and of course, this is not a recommendation, so I'm very clear that we're not recommending any stocks to anybody. But in terms of what we've seen, what commentary we have, and prices stand, between the three of them, who seems better placed at this stage?
Okay, that's a
tricky question.
It's a tricky question.
And completely different entities, right? Because I would argue that you have Mahindra and Mahindra,
which is a group entity.
And which has farm equipment and automotive. Tata Motors is a Jaguar Land Rover play because 70% of their revenues come from Jaguar Land Rover. Maruti Suzuki, India's largest passenger car maker, and seeing a transition from entry level to SUVs. It is the largest by volumes right now, and you could see a situation where down the road it could boost its SUV offerings to have the very large offerings as well.
So no decision on this.
You can't. I don't think that you can necessarily.
I guess it depends on what your preference is. If you want PV and EV, you pick Maruti. You want luxury and EV, you pick Tata Motors. You want farm and EV, you pick
SUVs. Farm and SUVs.
Farm and SUVs, you pick M&M.
But hopefully we'll give our viewers some perspective on Mahindra and Mahindra. The fact that, yes, when you look at its peers, the multiples might look very attractive, but as Samina pointed out, it is trading at multiples that is higher than its historical averages. So bear that in mind as well. Lots to talk about before the start of trade. We'll talk about several individual counters as well as the latest from the F&O space, and you'll find all of that after this very short break.
Welcome. You're watching India Market Open. Quick look at the gift Nifty before we move to what the FNOQs look like this morning. And we're set for a mildly positive start, I would say, as best. Let's quickly pull up Asia as well and see what's happening there. We've seen mixed cues largely as far as Asia is concerned, and that trend continues. Only Shanghai about 1% up and Hang Seng 1% in the negative. But can we sustain above 22,000 is the question. Are we going into the next hunt for a trigger after Q3 is done, and what are FNOQs looking like? Agam is joining us for all that and more. Agam, is the mood largely positive?
The indication suggests that we are likely to sustain about 22,000 at least over the course of the next few days. And if we do in fact come off 22,000, then well, could potentially be in some challenging times. That said, as far as Friday is concerned, and as I mentioned earlier, it was the fifth time where the Nifty tested 22,000 and possibly the third time where it closed about 22,000. Now, we are keeping an eye on the index futures, which saw about 2.5% increase in open interest towards longs. The Bank Nifty picture wasn't very different. The Bank Nifty also saw an up move with a little bit of an increase as far as open interest is concerned, also towards fresh longs. Coming down to the options market, we talk about the change in OI. Now, because 22,000 has become a little bit of an important level of late, we've seen a substantially larger amount of puts coming through or as compared to calls. This also indicates at the moment that there are more number of traders who are a little bit more confident about the Nifty sustaining about 22,000 as compared to it moving below and perhaps staying below that mark. And this is how the positioning is as far as Friday's day of trade is concerned. Of course, if you do see the Nifty come off, then you'll start seeing a lot of unwinding of those particular puts. But even in terms of your overall range, based on maximum open interest, because of the action on Friday, your max OI input has now shifted from 21,700 to currently at 22,000. Of course, on the higher end, we continue to track something like 22,600, 22,500, where we could see the next level of resistance as far as the Nifty is concerned. Still about 2% away from current market levels, but well, an important level to keep an eye on all the same. We did see a lot of strength across stocks. Metropolis, Emphasis, Nalco, Polycab, all of them is looking at advances. Gujarat Gas, of course, saw weakness coming through, so shorts building in there in terms of stocks, which is seeing unwinding. We have long unwinding for ICICI Lombard, but besides that, M&M, Deepak Nitrite, Chambal Fertilizers and Apollo Tyres, all of them looking at about a short covering. So all in all, it did turn out to be a good day of trade as far as the markets are concerned. The question really is, where do you go from here? What do you do with these indices? Let's get an expert opinion. We have Shilpa Raut of Prabhudas Leeladhar who's joining us on the show. Shilpa, good morning. Thanks for joining in. Let's start with your view on the Nifty and the Bank Nifty. How would you trade them now?
Good morning, everyone, and thank you for having me on the show. Talking about the indices, we see that Nifty and Bank Nifty definitely has given some sort of very bullish trend now. And Nifty particularly, sustaining above 22,000 is a clear indication that, we might see that new all-time highs coming very soon. If you look at the option chain for the weekly and the monthly, or even for the March monthly expiry, we see that 23,000 call writers are very active, with 22,000 and 21,800, put writers being very active, which also indicates that, the limited downside scenario now with a largely upside potential going to be playing out. Talking about Bank Nifty also, we see 47,000 and 49,000 call writers on weekly basis, very active. And if you look at the March monthly expiry, the next series, you see that 50,000 call writers are very active. So which means that, the upside is definitely looking way up towards 50,000 mark with immediate, support at 45,000 levels.
All right, Shilpa. So can you talk to us about trading ideas that you can offer us this Monday morning?
I have a couple of ideas. For indices, I believe, one can go for March monthly expiry. It is a little positional view from here, and I have recommended the same in Prabhudas Leeladhar. For 50,000 call, it is, I had recommended around 120. Of course, it has moved past to 200 right now. But on any declines towards, 150 or something, you can definitely go for a buy. Keep a stop loss of 60 and, it should do 450 to 500. This is a very largely potential, a positional trade, but one can definitely bet on that. Talking about stocks, I believe, two buying recommendations I have. The first one would be in Tata Com. Tata Communication we saw has given a breakout now, and the stock sustaining above 1800 is a very positive trigger. You can see levels of 1950 coming days. So as long as it is holding above 1800 is a very positive trigger. So one can buy here with a stop loss of 1780 and look for targets of 1880 to 1900 on first basis, and little ahead of that 1950 should be the next stop. The other one would be Chola Finance. Chola Finance is giving a breakout above 200 DMA, which is roughly placed at around 1130 28 zones. So as long as this 1120 is held, this is a very strong support. One can look for Chola Finance to move towards 1200.
Shilpa, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets, and also, of course, giving us a handful of those trading ideas. We'll be watching out for that and some crucial insights coming in as far as the technical stance on which the world markets are currently being built upon. Well, with that, it's back to you, Samina.
Thanks, Agam. That's the F&O picture and stock recommendations coming in from our analyst as well. In the meantime, the implied Nifty is indicating to a flattish start with a slight positive bias. Remember, we're 80 points away from our record highs that was made on the 16th of January, exactly over a month ago. Well, 52 points high on implied Nifty. If it goes as indicated, we should be seeing a start closer to those record highs. But we've got lots of stocks that we'll be tracking. A few of them would be carried forward from Friday itself, but they were too active to ignore this morning. So we've got Varsha standing by with more on that. Varsha, what are we watching out for this morning?
Good morning, Samina. So let's start with SpiceJet, wherein Chairman and Managing Director Ajay Singh and BZB Airways, which is largely owned by Ease My Trip CEO Nishan Pitti, has submitted a joint bid for Go First Airlines. Now, the bid has been submitted by Ajay Singh in its personal capacity, and the SpiceJet will serve as the operating partner for new airline by providing staff and services. Also, this collaboration is anticipated to generate synergies between the two carriers, leading to improved cost management and revenue growth. If you see the stock performance on Friday, stock was up 13.5%, while in last 6 months, stock has been up almost 45%. Then we have Bajaj Auto, where a record date has been fixed as Feb 29 for rupees 4,000 crore buyback on Jan 9th. Board had approved approval for buyback for up to 4 million shares, total consideration at rupees 4,000 crore. Stock performance since announcement of buyback, stock is up almost 18%. Lastly, we have Novartis AG, wherein Novartis AG on Friday announced the strategic review of Novartis India Limited, which is listed in India. The strategic review will include assessment of 70% shareholding of Novartis AG in Novartis India. Now, Novartis said that there is no assurance that the strategic review of Novartis India will be completed in 2024. Also, this will have no impact on Novartis Healthcare Private Limited, which is separate from Novartis India. And if you see the portfolio of Novartis, it has a largely off-patented branded products catering to bone and pain, transplants, mature neurology and oncology segments. Now, media reports suggest that drug maker Dr. Reddy's is in race to acquire the Novartis AG stake in Novartis India, while Dr. Reddy declined to comment on NDTV Profit's email queries. On Feb 22, company entered into exclusive sales and distribution agreement with Dr. Reddy for a few establishment medicines. Volume growth there was in double digit. Also, if you see stock performance for Novartis India on Friday, the stock was up 13%, while in last 6 months, stock is up 45%.
All right. Definitely an interesting piece of news to watch out for. Remember, Dr. Reddy's has neither denied nor really confirmed that report that it would be looking at Novartis, but it seems like the natural fit, because in 2022, Dr. Reddy's and Novartis' India business had a distribution tie-up, and strategically, if you look at it, DRL has 3 times Novartis' distribution and 10 times its physician reach. Novartis in itself has quite a valuable sort of portfolio which Dr. Reddy's would be interested in. They have revenues about 379 crore. They have oncology segment of patent brand products catering to bone and pain transplant, mature neurology. So it would be quite a catch for DRL. DRL and Novartis, both stocks that we should watch today. In fact, we'll get a quick word in just a bit from now with our analyst on what the pharma space is looking like and these counters as well. But meanwhile, we'll go to Mahima in just a bit for some of the other stocks that are in news today. Mahima, what's on your list?
Right, Tamanna. So firstly, defense stocks will be in focus today because defense, opposed the DSC meeting, the defense companies will get order worth rupees 80,000 crores. So BEL, HAL, Bharat Dynamics will be the biggest beneficiaries of this. And BEL has also recently received an order of approximately 2,000 crore from the Indian Navy. So all of these will be in focus today. Then we have Titagarh Rail System, where it has received an order of approximately 170 crore from the Ministry of Defense for 250 specialized wagons for, again, Ministry of Defense. Then we have Balrampur Chine Mills, where it is foraying into a new business of polylactic acid for manufacturing of bioplastics. Now, this is important because sugar will be used as a raw material in the manufacturing of this, and they've approved an investment of approximately 2,000 crores, where 800 will be utilized via internal accruals and 1,200 via raising debt. Then we have CRISIL, where CRISIL's results came out. Their total income is up 34% and net profit is up over 110%. So good set of results. The board has recommended a dividend of 28 rupees per share. The rating segments have grown by 18%. And then the research, however, the research analytics solution segment saw a bit of dip. It showed around 9.8% this quarter versus 12.4% of Q3 FY24. Then lastly, we have LIC, where it has launched a new product of LIC's Amrit Bal to cater the domestic market. Now, this is basically a non-linked, non-participating individual life insurance saving plan, and also two positives for LIC. One is the new launch of product, and second, they've received an income tax refund worth rupees 21,700 crores. So all of these stocks will be in focus in the trade today.
Thank you for that, Mahima. There are a whole bunch of names that we will be tracking. The likes of a Titagarh on order wins. Defense also will be a sector you want to track. Stocks like HAL and BEL will be counters that might be seeing some more activity in today's day of trade. You've also got CRISIL, the reported numbers. You have data patterns, where you got a big block deal that hit Tata Power, SpiceJet, Paytm, to add to the list in today's day of trade. Well, we will be trying and connecting with an analyst on the pharma pack any minute now. But just before that, Sudeep Shah, Deputy VP Head of Technical Derivative Research at SBICAP Securities, joins in. Sudeep, it's put a pretty good week behind us. Barring Monday last week, the markets have put up a good show. 3 straight days of higher highs, closed to about 22,000 on Friday. Follow-up buying is expected, but do you think it could be a morning where we get a gap up, but finally see some consolidation in the second half of trade, only because of law of averages?
Good morning. See, what I feel is that the way the last week has shaped up, more than Nifty, it was the bank Nifty which has stolen the show. And if you see what has happened with Nifty is Nifty got support from IT, it got support from auto, pharma. Even the CPSE stocks, oil and gas stocks had moved up. But had it been not for the bank Nifty, which managed to close above its 20-day exponential moving average, like straight for the third day, and that is the first occurrence after 17th January gap down open, which Bank Nifty had witnessed of more than 1,000 points. So I feel that is one critical point that we should not be missing out. So now for the entire rally for Nifty and Bank Nifty to say even post consolidation for the rally to continue, for Bank Nifty 45,900, 45,800 zone will be a key. And for Nifty, 21,800, 21,850 positionally will be the key. Now, coming to your question regarding the post-opening, how could we be witnessing the markets, is that post this gap-up opening will be once again opening closer to 22,100, where the previous multiple tops are placed. So I feel before crossing that, there would be some back and forth, some consolidation witnessed. But overall, now for the day, 21,950 holds the key, and till the time indices are sustaining about 21,950, I feel slowly and steadily, the upside is there up to 22, 250, 22, 300. And just to map it up with the options data now, there was significant put writing visible in the 22,000 as well as 21,900 puts on Friday, as well as the PCR is now sustaining well above 1.1. So that gives us comfort that on dips there would be buying witnessed. And I just feel that one thing what we should not be doing is chasing the gap up. Let the market settle after the first 1 hour and then pick up opportunities as they come.
Absolutely. Stay on with us, Sudeep, and let's just take a couple of minutes to look at what's happening with Novartis and Dr. Reddy's and what that news report means for the stocks. Forum Parekh, research analyst at Sher Khan by BNP Paribas, is with us. Forum, very good morning to you. Glad to have managed to get you online after those initial connectivity hiccups. But let's talk a bit about why Novartis's India business will be a good fit for DRL and why they seem to be the prime candidate.
Yeah, hi. Thanks for having me on the show. So, Dr. Reddy's, as we know in the past, have also taken brands from Novartis, which was Sidmills, and some other brands also in 2022. After which it has been able to revive it very nicely. In 2022, it had bought some selling and distribution rights for a couple of brands, and post acquiring it, it is now able to make it a 100 crore brand and run. I mean, it has a double-digit growth rate. So earlier also we know that Dr. Reddy's has bought Sidmills and other brands, and now also we know that Dr. Reddy's want to increase its India business. And it has the muscle power, it has cash on hand. So Dr. Reddy's is always looking for opportunities, even in the US market and India market being a branded market, high margin market. And in Dr. Reddy's Horizon 2 strategy also, they want to increase their EBITDA margin run rate to around 25, 27% from current, 15 to 20% run rate. So we feel that Dr. Reddy's, though they have denied of any such speculations, but we feel that Dr. Reddy's could be in a position to buy the controlling stake because 70% stake on current market cap of Novartis, it would over to some 1,100-1,200 crores, which Dr. Reddy's could easily pay. So, and it can strategize and increase Dr. Reddy's margin. So we feel that there is a likely possibility of Dr. Reddy's being able to buy.
Sure. No, they definitely will be able to buy. Probably they want to. They've not confirmed it yet for him. The question is that at current valuations, would Novartis be a good buy? Would you see this as an advantage for Dr. Reddy's?
I would definitely see this as an advantage for Dr. Reddy's because it would, contribute healthy growth to its India portfolio. And the pharma market is an expensive market, but there's always a double-digit growth ahead in the domestic market. So I feel that current valuation do augur well for Dr. Reddy to buy Novartis at current market price.
For him, a couple of what sort of a premium do you think is acceptable for a Dr. Reddy's shareholder or an analyst who tracks the sector for Dr. Reddy's to pay for Novartis's Indian arm?
So India market is an expensive market, and any deal which has been done, it has always been done at a very hefty valuation of 5 to 6 times market cap to sales. So that could be the kind of valuations that Dr. Reddy's would be Novartis would be looking at. But then even in the past there were many deals which were called off. Indian pharma market is in a very good spot right now, and when the market booms, such kind of corporate actions would always take place. But whether it would get, fulfilled or not, we do not know. But then, if the deal has to happen, it could be anywhere in the market cap to sales of, 5 to 6 times is what we believe.
So for him, if the market cap of Novartis India is about 2,000 crores, 5x of that is what? Takes me to 10,000 crores. 70% of that values it at a 7,000 crore deal for Dr. Reddy's. They have 5,900 crores on their books. Are we then saying that the rest of the deal might have to be funded by debt?
We don't. That's the kind of broad, expectation we have. It could be anywhere, below that also. But that's the at most kind of run rate what they would pay.
So, okay, so I don't know how those numbers will work out, but of course we'll have to wait and see. From also Dr. Reddy's conference call post the earnings, there was no indication of any fundraising plan. So maybe 5x is probably not what Dr. Reddy's is going to be willing to pay. But so yeah, I think their best bet would be in the range of 2x to 3x. But any other risk that you see? Any other contender that could join this race?
So large pharma players like Sun Pharma would also be, in a forefront to buy. But then, as far as I know, Sun Pharma wants to focus into specialty or innovative products. So maybe in a generic portfolio, I think it could be only Dr. Reddy's, who would be in the forefront to buy amongst the large cap players.
Right. Thank you, Forum. Great talking to you today on the show. That's the perspective coming in. The kind of valuations Novartis is looking at is 5x of its market cap. And as of Friday, that stood at 2,200. That takes it above 10,000 odd crores. And of course, a 70% stake in that would mean that Dr. Reddy's would have to shell out anywhere in the range of 7,000 to 8,000 crores, which is far more than the cash it has on its books. Now, whether this deal goes through or not is going to be anybody's bet. But Sudeep, what about Bank Nifty? How are you viewing Bank Nifty at this stage? It closed at 46,892, which is it was the closest to its recent high, but 44,850 I know is an important support. How do you play Bank Nifty at this stage? Long could be initiated in early trade?
Within the Bank Nifty, it is important to find out what stocks are looking good. So now within the Bank Nifty, on Thursday and Friday, we have seen HDFC Bank rebounding. We even feel that ICICI Bank is a strong contender for an up move. It has consolidated for last month and a half. So I feel the key for Bank Nifty to sustain at higher levels would be ICICI Bank as well as HDFC Bank, because PSU banks have done their bit. They are already bullish. They are already moving with strength to strength. So now it is whether you say IndusInd Bank, Axis Bank has its own weakness in the last week for all the reasons that we have seen. So I feel the key would be HDFC Bank as well as ICICI Bank. And levels wise, if we see Bank Nifty 44,800, agreed, that's a 200 demo zone last week, at least in the last 7-8 sessions, 4-5 retest of that zone has confirmed that there is a strong buying which is visible there. Now it has obviously underperformed, but not breaking an important support in itself is like giving a signal that this kind of zone is becoming the base for Bank Nifty from a short-term perspective. But now for it to move higher from here on, I feel two levels would be very crucial. First level would be 45,930, 45,950, where the 20-day exponential moving average is placed. And I feel this is, as I said in my morning commentary also, that this is the first time that we have seen consecutive 3 closes above the 20-day exponential moving average post its fall from the 17th of Jan gap down. So this is a positive. Now from here on, this support zone of 45,900, 46,000 would hold the key. And I feel looking at the options data where 46,200 put writers were quite active in trade on Friday, that zone of 46,200 could act as a strong support, and we could eventually move higher up to 46,700, 46,800, right, where the 50-day moving average is placed.
All right. So, exciting week up ahead. But the key question, Sudeep, is what would be your top calls in a market like this? So much news flow that we've seen over the weekend. Any of those counters on your radar?
The first call that I have is from the CPSE basket, that is Container Corporation. Now, for this stock, we have seen the stock has given its highest closing in about last several weeks, and even it has crossed its 9th Feb swing highs also, which were around 970. On a steady up move from a weekly charts perspective, if we see higher top, higher bottom formation, and also there have been enough consolidations and breakouts in the entire journey from November's low of 660, 670 zone. So I feel the stock is now poised for a decent breakout on the upside. can be bought with 960 stop loss and 1020 targets on the upside. The second stock that I have is PCBL. Now, Philips Carbon, if you see this stock from the mid-cap space, there was a consolidation in between January month. Then the stock retested, broke down below its 20-day exponential moving average, and once again has reclaimed that with strong volumes. So the structure is quite good on the daily, weekly, as well as the monthly charts, and I feel that this stock can do well from here on and can be bought with a stop loss of 318 for a target of 345, 350 on the upside.
So Container Corp and PCBL on Sudeep's radar. We'll get more of his calls after a very short break. We'll be right back with the pre-open. Stay tuned.
Welcome back. You're watching India Market Open. A quick check on implied Nifty. It's indicating to be another good start for the street, at least in early hours of trade. A new record high in opening cannot be ruled out at this stage. There will be lots of stocks in focus. I want to talk about some of those pharma movers that we picked up in trade on Friday. Sudeep, anything for the mid-cap pharma pack that you're constructive on this morning for a quick trade?
From the mid-cap space within the pharma, if you see, there's one name which did really well on Friday, and that was Granules. Now, Granules has witnessed a breakout, and it was consolidating for the last 1 month and a half between 430 and 400 on the downside. And there was a good breakout above 435. So with this, it has now reached its highest level, and it's a strong chart on the daily, weekly, and monthly time frame. So I feel this could be looked upon from a quick short-term trade. 440 will now act as a strong support. Until this is guarded, I feel on the upside 475, 480 levels also can be seen.
Absolutely. Another counter that's on the radar is definitely 197. A whole host of brokerage reports after they've had their FAQs become very clear from the RBI. In fact, just news coming in that Jefferies has halted all coverage till regulatory issues are closed. An interesting report from Bernstein as well that asks whether this is the rock bottom and whether the worst is over in a sense for Paytm. Pranav Gundlapalli of Bernstein joins us now on the phone line on more. Pranav, very good morning to you. Great to have you on the show. Now, the question is that what from the FAQs actually gave you comfort? Because they made it very clear that they wanted or were urging users to move their accounts when it came to FASTag, etc. So I'm just wondering what you saw as a positive there.
Good morning, Tamanna. I think the big positive is the continuation of the merchant payments, right? I think be it the QR code or the sound box or the POS machines. I think that continuing is the biggest positive. I think it was largely expected that PPBL will cease operating. Right? I think maybe that got extended by 15 days, but the products that they used to offer, which is the savings account and the wallets, will cease to exist. I think that was largely expected. The fact that RBI announced that merchant payments will continue, I think is a big positive.
Okay. In terms of contribution to, 197 stop line, is that significant enough, Pranav? And can we factor in the reputational risk? Yes, for now, things don't change for merchants if the underlying account is not with a, Paytm Payments Bank, but with some other bank. Axis also seems to have come in as a nodal agency. Is that going to be enough to keep customers?
I would think so. See, I think from a revenue perspective, the revenue-generating merchants were the ones using Soundbox and the ones using the EDC machines. I think there it is reasonably sticky, and switching to alternatives does involve a significant effort. So retention should be easier. The QR code merchants might have temporarily stopped using Paytm, at least a good percentage of them. So you might see a GMV drop, but revenue should be, limited impact of revenue should be there. And once this is sorted, given they have that large sales force on the ground, I think they should be able to get most of the merchants back sooner than later.
Okay, so the hit then you say or you think will be contained to the payments bank ceasing to exist and others will come in. Do you expect other big names after Axis to come in to handle some of those nodal accounts?
Yes, I do expect them to diversify into 2 or 3 banks at least. And I do expect others to jump in. It's a reasonably, safe exercise for them because they're just being the nodal account. So I don't see any issues with other banks jumping in onto this.
And this target price of 600 rupees that you're seeing, Pranav, what is the kind of timeline? Are we going to see a bit of a spike in the next couple of sessions at least?
Yes, I think I do expect a spike in the next couple of sessions, and as the stock gets closer to our target price. And I think the next big catalyst would be them coming out sometime in March and giving an update on what exactly has been the attrition, because of all of this development. And a good number there could drive further upside.
Pranav, you've obviously been extremely busy. Either it's Paytm or HDFC Bank. So if your clients haven't kept you busy, we definitely have. Very quickly, you've revised the target upward to 600, which you talked to Tamanna about. Any sort of upside risk over here? What sort of attrition number in March do you think could lead the next leg or provide the momentum that Paytm currently is looking for?
See, I think there are 2 things here. One is the attrition number. There will be a loss of business in this month for sure. I think the key will be what percentage of it comes back in the last weeks of March before they report. So getting back to 80-90% of their payment revenues, I think would be a big positive. The second one is, I think, just announcing that their lending operations resume. Resumption of their lending operations, I think, would be a big positive, right? So they have halted that. I think getting to a BAU on that, I think, would be the other big positive for them. So those 2 would be the big catalysts that I see, and which then means that the permanent damage from PPBL going away is quite limited from there on.
Pranav, I mean, we've covered this well and good. We, of course, spoke last week regarding the questions you would like or investors should be asking the HDFC management. Now, all eyes are on that analyst HDFC management meet. Anything else that you're critically watching out for that we should be on top recall this morning?
I think I would be hoping to hear something on their lending strategy, right? So if they would, if they plan to continue keeping the yields low and going in a conservative mode, or if they're seeing enough data points that would suggest they need to switch gears, right? I think to me that's the big question. And I think the cost of funds will sort itself out. I don't see that as a big reason to worry at this stage.
And a big, thank you, Pranav. A big gap up on, of course, Paytm is what we're expecting. And Pranav, we will try and connect back with you once this HDFC analyst meet wraps up and get your feedback on what you thought. So two very important talking points, the sectors or the stocks that Pranav of Bernstein has been tracking is Paytm and HDFC. Like we said, we can't rule out a 5% gap up on HDFC Bank. Bernstein and Citi both have pretty aggressive targets now. 600 rupees is what Bernstein has. Citi has a target of 550 rupees on the counter. So it's going to be a good one to watch out for in trade today. Deven Choksey as well now joins in. Good morning, Deven. Hi, it's Samina. How are you feeling about the markets this morning? I was thinking about this last week and I said we don't have too many triggers left and we might be going into a price or time correction. But as always, the market is so habituated in surprising us that we managed to actually have a pretty good run on Friday. Going into the near term, so pre-elections, where are you seeing the markets headed to? Is it still a buyer's market?
Good morning, Samina. Well, I think the market is giving opportunity in a rotational manner. If I think till some point of time the opportunity was available in likes of Reliance, likes of Tata Motors and among other stocks, today the opportunity is coming back into the banking stocks. So certainly I think we are seeing the rotational approach, I think, as far as the traders are concerned in building their positions. I see a strong possibility of a higher amount of participation coming in from the banking space in particular. And also, I think some of the IT and pharma companies continuing to support the market at the current levels. So nothing wrong with the fundamentals, nothing changing as far as the fundamentals are concerned. By and large, I think the growth opportunities that we have been talking about, I think remains intact. And as a result of which, the stocks which are getting corrected on the pricing front, they find favor the investors, traders in the market who want to buy at a corrected level. So today the banking could be the opportunity that one could possibly experience.
Okay. Deven, so in that case, also very quick word on what did you make of the earnings season so far? Have you gone back and upgraded your earnings of the Nifty 50 companies?
Well, overall, I think the season has been quite satisfactory, I must say. And I think by and large, the companies have been able to maintain the margin. Though in some pockets, including FMCG and also including some of the specialty chemical companies, there has been a relative amount of miss as far as I think the numbers are concerned. But in my viewpoint, I think one shouldn't be looking at these companies on a quarter-to-quarter basis. Maybe particularly the chemical companies, specialty chemical businesses, they look relatively more stronger going forward. I think they have seen the worst in their past quarters, absorb higher amount of raw material inventory that they had in the portfolio, and also now seeing relatively better offtake from their customers, particularly in the contract research manufacturing areas, where probably companies are seeing the better offtake demand coming in from their global customers. So I would think that save and except couple of sectors, including, as I said, FMCG, I think more or less the earnings season has played out well in this particular quarter.
Deven bhai, very good morning. Tamanna here. Earnings season has ended largely on a positive. The question is, what is the next big trigger that markets are looking for? And I want to understand whether we will see another pre-election rally. Data suggests that you do see a pre-election rally in the 3 months preceding the actual polls. Here, considering that the result is pretty much priced in, do you see this becoming the next big trigger?
Yeah, Tamanna, good morning. Well, I think you are absolutely right. The results are already priced in as far as the market is concerned. And I don't think that results are going to show any kind of surprise as far as the upside or downside for that matter also is concerned. To me, I think what it appears is very clear that the new funds are coming into the economy, and particularly these funds are coming into some of the infrastructure companies. That is where probably I think you are likely to see the inflow of new money into the market. As far as portfolio money is concerned, that money is coming into the ETF segment largely, particularly from the global investors, including Indonesian traders. I think they probably move quickly into these different sectors on a rotational basis, as I explained. So I think that process is continuing and probably like would continue pre-election. However, I think we might see some amount of corrections happening into some of the large caps and the mid cap stocks. They have ran up much ahead of time as far as I think their prices are concerned, and quite possible that the shift might take place. Profit booking might happen into some of the mid cap, small cap companies, and money would flow into some of the large cap companies where the opportunity size is relatively stronger. IT is a case in point. I think till the quarter result announced, I think the ITs were languishing. Most of the frontline IT companies were languishing. And today, we are seeing 15% kind of an upside, which has already come in some of the counters. So in my viewpoint, I think that is a distinct possibility that wherever the large cap companies are not catching up on the valuation, they will find the funds getting attracted to them, and small and mid cap companies might see some amount of profit booking. Call it a sectoral play, call it a rotational play as far as market is concerned.
Right, right. Well, you know, one play that we should talk about, and I just want to get Sudeep's view very quickly, is on HDFC Bank. Now, we know that this investor meet is happening today. It's being organized by Goldman Sachs. It's closed door, but it is the first key sort of interaction that the management will have since the Q3 results disaster and then what happened to the stock. The question is that have we bottomed out on HDFC? What are the charts telling you, Sudeep?
See, we are not yet bottomed out on HDFC, and I feel it was just because of the oversold zone that the stock was trading at around 1370, 1380 that we got this move. And for me, 1450, 1455 zone from where the breakdown actually began in the first week of Feb, that would be very crucial to cross. Although it is still better right now because this is helping Bank Nifty to sustain above 46,000, 46,200. But for the stock to move from the current levels, there are two important levels that I feel 1410 will act as a strong support, and above 1450 the stock, at least we could confidently say that the stock has ended its downtrend and now steadily could head up to 1500, 1520 on the upside. So 1410, a crucial support, and the 20-day exponential moving average of 1450 will act as a stiff resistance because that was broken on 16th or 17th of Jan, and post that the stock has never reclaimed that again. So that would be critical in my opinion.
Sudeep, how would you place SpiceJet on the charts? Did a 12% move on Friday. If we do get a gap up, could it still be bought into?
The charts are not completely bullish. They're sustaining at higher levels since, I guess, since the December first week. The stock has been between 50s, trading between 57 and 69, 70 on the upside. And once again, this was just because of the news that the stock had witnessed such a big rally of 11%. So overall, till the time the stock is sustaining above 66, 67, I feel that the stock could still continue edging higher, but I feel that it might not be that bigger magnitude of the move that we have witnessed on Friday. So those who are holding this stock could continue holding this with 66 as a trailing stop loss, but below 66, I feel the stock could once again head back towards the previous trading range of say closer to 60 levels, 58 levels.
Your pre-open rates have settled. You're just a couple of minutes away from open, and you're looking like you're set for a good day. Sudeep, just before we get to the opening, you know, last calls, and do you think that you see the Nifty sustaining comfortably over the 22,100 mark today?
See, there will be in the first 15-20 minutes, there would be obviously some choppiness or some consolidation, given the fact that we would be only 25 to 30 points away from the previous multiple tops. So I feel that could be first 15-20 minutes could be a bit edgy, but overall 22,030, 22,050 zone would be a strong support post opening. Until this is held, post some initial consolidation, I expect the Nifty to cross its previous multiple tops and head up to 170, 22,200, say by the end of the day or by tomorrow.
Right, Sudeep, Deven, stay with us. We'll just quickly address market opening. Pre-open was indicating to a positive start on the street. So you are expecting gap up. There will be lots of action. It could be restricted to the broader markets once again in today's trade. On the large cap space, HDFC will be in focus ahead of the analyst meet. But apart from that, nothing too major that we would be tracking. And that's a start pretty much in line with what the implied Nifty was indicating, to 40 points higher, 22,080. Remember, we closed at 22,040 in trade. We've got a slight gap up. But like I've said before, we cannot rule out a day when you might consolidate in the second half of trade, only because the market has shown enormous amount of strength over the last couple of days. 38 points higher off the day's high point already, but looking good at these levels, shy of 22,100. The Sensex trades the gain of 100 points as well, so about 0.1% higher on that. Bank Nifty is not doing too badly, and that is something we will be taking heart from. 46,480 on Bank Nifty, a very smart 100-point up move on Bank Nifty. Now that is what is going to give some support to the Nifty when it starts looking for that over the next few hours of trade. The breadth of the market is strong. The broader markets are moving largely in line with the benchmark. So you've got, in fact, a little bit of outperformance coming in from the mid-cap index up to 50 points. The small-cap index also performing in line, 0.7% higher, 100 points gain on the Nifty small-cap index. The broader markets, once again, like I said, looking far more active than the large-cap stocks. Let's take a look at the Nifty 50 and see where the movement is. The bias is on the upside, so the breadth is good, but no runaway rally on the street is what we have. I'll start with the winner first, Bajaj Auto. The counter is looking good. There is, of course, enough and more news on that, with the Adani Group companies looking pretty solid. Adani Enterprise making a strong move, 1.5% higher. Dr. Reddy's on talks that it could look to acquire Novartis' Indian arm, trades the gain of 1%. SBI, DV, so pharma is looking okay. The Adani pack is doing fine. The Bajaj twins are trading positive this morning. You've got Tata Consumers, Aisha Auto as well, holding up in today's day of trade. But no real big sharp sort of up move yet this morning. On the sell side, IT is seeing some profit taking after Friday's move. So you've got TCS that's lower. HDFC Life was a big move on Friday, so insurance taking a bit of a setback this morning. L&T, IndusInd Bank, Infi, Axis and Ultratech are trading flat. But Tamanna, nothing too exciting to write home about, at least in large cap space early this morning.
Yeah, the action seems to be in individual counters, and we'll start by seeing what's happening with Paytm, one of the stocks that we've been tracking in a pre-open. Remember, on Friday, the RBI made it clear that at least their soundbox and QR code business will continue. We had called it in trade setup, something Agam had said that he wouldn't be surprised if you saw a 5% upper circuit, and that's exactly what's happened. Jefferies has stopped coverage, but Bernstein raised the target price to 600. We just spoke with Bernstein. That says that perhaps the contagion to the company will be limited. Is the worst over for Paytm? We may just be seeing that turnaround story. The other stock that we need to see on how it's opening is definitely Gujarat Gas. Nomura note on Gujarat Gas that has maintained a buy, hiked the target price to 440, and you're seeing a mild uptick this morning. Same with Ipca Labs. Ipca Labs interesting because they expect at least 15 to 17 more products for Ipca Labs over the next 2 or 3 years. That pipeline is looking interesting. SpiceJet is the other one we should look at this morning. So it's Ajay Singh's personal bet in his individual capacity, him and Busy Bee, which the Pitti brothers have co-founded, will be betting or will be bidding for SpiceJet, for Go Air, but SpiceJet could be handling the operations. Considering that SpiceJet itself is trying to clean up its books, The stock has not reacted too positively this morning. PB Fintech, on the other hand, had some good news coming in. They have an IRDAI approval for a license upgrade, and you've seen a couple of interesting notes on PB Fintech as well, so we'll pull that up and see what's happening. The other stock that we want to talk about, of course, is Quess Corp. Let's pull up PB Fintech here if we're not managing it on the AR. But all right, there we have. So we have Balrampur Chini, we have Quess, some of the other newsmakers. Quess Corp up nearly 13%, and this was on our list this morning. They're going to demerge their company into 3 verticals, and they look at a lot of investor value unlocking. Clearly, investors agree as well. Balrampur Chini also up in the green this morning. All right, PB Fintech there, another newsmaker that we were talking about with that IRDA license. So quite a few stocks, responding in early trade-to-specific news, but overall, no real fireworks, right, Samina?
No, except for Quess Corp, like you mentioned, and I'm going to add one more to that list, which is actually looking pretty good. Was in focus all through last week, continues to do well this morning, and it's MRPL. So if we can get MRPL on the screen, it'd be useful to see what's happening. 12% up move. Remember, the oil and gas pack has been extremely active. We caught up with Pobal last week where he said he's literally going back to the drawing room every 48 hours to revise targets on some of these oil and gas names, MRPL being one of them. The stock is seeing 11% up move. A couple of counters that continue to see follow-up action today is data patterns. We mentioned about the block deal that took place on the stock on Friday. This morning to the stock sees a gain of 6.5%. Rail Vikas Nigam is seeing a 5% up move. You've got Minda Corp as well seeing a gain of 8%. Balrampur Chini on plans of its new business trades with a gain of 4.5%. CRISIL reported a very solid set of earnings. The company is up 4.5% in trade. ITI Cementation also, ITI, pardon me, is also in the news this morning, on back of which the stock trades the gain of 3.5%. So all in all, it's an interesting morning. You've got the fertilizer stocks recovering after their big fall over the last couple of weeks. Have been weak earnings from that pack, but pre-election, some of these names are seeing a little bit of a bump up in trade. Deven, we've talked about a couple of names that are in the news this morning, but I want to get your views on what are you making of SpiceJet trying to go out and acquire crisis hit Go Air? I mean, it's not like SpiceJet's got the house in order itself. They've recently concluded the 744 crores of fundraising. They've got another 1,000 crores of fundraising approvals that are sitting in place. I mean, do you think this consolidation, this acquisition could be positive for SpiceJet in the medium to long term?
It's one can look at this particular aspect, I think, in 2 ways. One, SpiceJet on its own, I think, is struggling at this point of time. And probably in order to come out of the struggle, I think they have certain amount of synergy, I think, properties in particular available through acquisition of Jet. So from that particular aspect, if you look at it, I think their move is legitimate, sounding legitimate. However, at the same time, I think one shouldn't forget that I think on the other side, the challenge would be quite many significant actually. In fact, own operation is yet to stabilize. I think taking over the ailing company and integrate it into a stability mode is another challenge. And maybe I think the amount of money that would require, I think, to further run the operation or upgrade the operation, should they end up acquiring, that is also going to be the third most important challenge. So I don't know, I think, and one cannot possibly, I think, be very confident about the move the company is taking. But as I said, I think in the first place, thinking positive, they have the opportunity to acquire the ailing Jet Airways and their assets. Probably, I think that could, particularly parking assets included, particularly because of that, I think they would probably might find themselves, I think, literally more stable than what they are at this point of time on their standalone format. So I don't have any clear view immediately coming up from the investment perspective.
Sudeep, let's take a first call on the markets and how they've opened. The action seems to be definitely in PSUs. And perhaps we're seeing a return of interest in PSUs ahead of election. They'll lead the pre-election rally, possibly. Look at LIC this morning. LIC about 3.5% up, as is NHPC, both on the back of news flows as well. Do you see a further upside on both of these, Sudeep?
Yeah, so if you see LIC since morning, we've seen a gap up there. But from higher levels around 1090, there has been some profit booking. So I feel overall the mood is a bit, but it could consolidate, and LIC could have decent supports placed around 1030, 1035 mark, and overall the structure is well placed. So from a positional perspective, from a medium term standpoint, I feel LIC could head up to 1150, 1200. And along with this, I feel even the railway stocks today are returning back. Railways, the other CPSE names such as Coal India, NTPC. So I feel the entire pack is upbeat, and we could continue seeing action in this space, say today and for the next few sessions also.
Just a couple of stocks that are in focus this morning. Sula Vineyards, if we can get that one up. In trade, 12% of equity has changed hands in two block deals a few minutes ago. The stock on back of that is seeing a cut of 6%. Both those block deals have happened, and that took place right just before or around market opening at 9:15 this morning. The other block deal is Geo Financial Services. They've had 4.34 million shares traded in one bunch. So one big block on JFS. The stock is up nearly 2%. So both those counters trading or reacting to block deals. Of course, in the case of Sula Vineyard, that's a massive one. 12% of equity has changed hands. That's the take on these counters. Deven, you want to come in on Paytm? Are you buying into the fact that a couple of big brokerages have upgraded the target price? Their concerns seem to now have reduced in that sense, with Paytm doing all the right things now, of course, in terms of a reactionary move. At the current price, would you be adding Paytm to your portfolio?
So I think the UPI business, I think, which is the current merchant business, is probably saved, not getting affected. That's a good sign. But whether I think it's a money-making business, the money-making proposition is staying with the bank. On one side, I think when you process the UPI transaction, the incentives which is being given by the government and through a financial budget, and I think RBI is distributing, that particular money is coming into the bank and not into the Paytm wallet. So from that particular perspective, I think things don't change immediately. However, I think the things do change as far as I think they're getting little better time to transit from what they are currently to, I think, better compliance-driven company. Somewhere, I think, another 15 days of time has been given to the till 15th March. I'm not completely sure whether they come out of all this, and probably they are allowed to operate normally on the banking side of the activity. So would like to reserve my view on this particular subject, at least at this point of time. Would probably prefer to play a little more safe than otherwise. So I think would like to look at the better opportunities elsewhere.
So the cloud is not yet lifted off Paytm, but Novartis, DRL, just a quick look at both those counters responding to news. The news is that, of course, Novartis AG wants to sell some of its India business. DRL could be a contender. They have neither confirmed nor denied it. That stock up 2%. But look at what's happening to Novartis, because there's no confusion about Novartis' India business finding a suitor, and you're seeing an 8.5% rise. We talked about Quess as well. Deven, very quickly, I wanted to get your view on Quess and the three-part demerger that they're talking about, where they're sort of hiving off the payroll business apart from the other two. Do you see a clear value unlocking proposition here, and enough to sustain each of these three verticals?
Well, again, I think the strategy sounds rational. Let's put it in one line. It's a rational way of, I think, looking at the thing. Having scaled up and made the base in each of the three areas of working, it is natural for them to, I think differently, and probably, I think, hive off some of those particular areas of activities, including the payroll part, where probably, I think, the margins are not enough for them. So the other two areas could possibly give them little better prospects for the margins. Not completely sure at this point of time whether I think it becomes value accretive from the day one once the demerger has taken place. But one will have to study a little bit more in detail to, I think, get into the right kind of approach to how they build the other two verticals particularly. I think that one would need to understand a little bit more in detail from the management.
Sudeep, just a quick take on Quess.
Yeah, so if you see Quess post this gap up now, I feel it has broken out of the entire consolidation that the stock was into in the last 4 months, starting November. And maybe post this initial gap up, there could be some cooling off. But now 530, 540 zone will act as a strong support. Until the time this is guarded, I feel on the upside, the stock could head up to 620, 640, where the previous resistance was located, say, in the month of September 2022. So it could move up to that zone of 650 thereabouts, and this could be looked upon at on a dip of say 530, 540. The stock looks good from a medium-term standpoint.
The few stocks that we're watching, Quest Corp looks good from a medium-term standpoint on back of the demerger. MRPL, we've talked about this one extensively. It's been a star across the broader markets and the top performer in that segment. Deven, would it be unfair if I let you go without getting your view on the oil and gas pack and your top pick in that sector very quickly?
So we continue to hold our positive view on Reliance. That goes without saying because of the factors which are known to everyone now. However, I think the current situation is also probably, I think, working very favorably because higher GRM in the last quarter has actually, I think, ended up giving better amount of refining margin also to the Indian companies. And that is the reason for which I think we are seeing the relatively good performance from these companies, particularly the BP, HP, and even to an extent, I think ONGC in parts. I would think that I think companies have actually started getting a little bit more stabilized given the stability in the crude oil prices. In my viewpoint, I think commodity nature of the business, I think, still continues. So if we don't see the sustainable part of the earnings, then probably I think the market will not be very congruent giving the re-rating to the stocks. So that is the only caveat that one could possibly look at. Maybe I think I would probably stay with the relatively more forward-looking business in Reliance vis-a-vis, I think, the other two. HPVP may be slightly better off comparatively, but rest of the things I think could be, I think, more of a commodity player seasonal play.
Right. Thank you, Deven. Thank you, Sudeep. Great having both of you on the show. The markets, in the meantime, a quick check before we slip into a break. The Nifty had got a gap up of about 25, 30 odd points, so no major run up in early minutes of trade. The Sensex now in negative territory, and so is the Nifty. The 22,000, around 22,000 is what we have on trade. Broader markets still the holding out. We'll take a break. We'll come back. We'll talk to the management of Bluestar. They've actually had a pretty spectacular quarter. We'll understand from them if they will continue to grow ahead of the industry in the next few quarters as well. back. You're watching India Market Open. The market's going in a little bit of a consolidation zone after a very sharp up move that we saw in last week's trade. The Nifty trades flat at 22,000. The Sensex also trading flat as we see it. It's the action that is all over the broader markets that we are picking up this morning. But there's one company that's had a stellar performance to see the least. Thiagarajan, MD of Bluestar, joins us now. Good morning, sir. This is Samina joining in from NDTV Profit. You've had a pretty spectacular quarter. I know it was more or less on expected lines, but 24% growth, 25% growth on top line. Is that sustainable going ahead? Could you help us understand what led to that sort of a revenue growth and how much of it can continue to go for the next few quarters or calendar year 24?
Good morning. It is a pleasure interacting with you. Yes, it was a stellar performance. Summer season of FY24 was a washout. And I think the demand came back during the festival season. It is currently holding. And I would attribute it to pent-up demand. Second thing is the penetration levels for air conditioners are poor in the country. It's somewhere around 7%. So it will continue to grow is our view. On the B2B side, quite a bit of activities are happening across the segments, whether it is shop, showroom, boutiques, restaurants, healthcare, metro railway, or the manufacturing sector, data center. That had all these sectors have been doing well. So overall, B2B as well as B2C segments have contributed to growth. Even commercial refrigeration have done well, driven by the consumption growth in ice creams and frozen products. Your question is whether it is sustainable?
Yeah, yes.
I think Q4 so far the demand has been good. All of us are preparing for a great summer season ahead, and we are optimistic about closing the year on a high note and look forward to a great summer.
To a hot summer is what Bluestar is probably looking forward to. In terms of product mix, sir, I mean, I know the air conditioning business is only penetrated 7%. So irrespective of what happens, I'm assuming the growth there will continue in refrigerators as well. So you can give me a product mix that Bluestar currently stands at, and what are you expecting in contribution from these various verticals over the next few quarters or FY25?
See, we are a manufacturer, we are an EPC contractor, we are an after-sales service provider. Perhaps we will be the largest in terms of installed base that we have. So you can imagine room air conditioners is a significant part of the business. Commercial air conditioning and commercial refrigeration are also significant. You can assume all of them are somewhere. Room air conditioners should be constituting around 30% of our revenue, and 20% should be coming in from commercial refrigeration and commercial air conditioning. And in electromechanical projects, the company's revenue should be closer to around 25-30%. Now, that electromechanical project segment includes the projects, commercial air conditioning as well as service. Now, if you ask me, all the segments are currently doing well, and I would expect the demand to continue in FY25 as well. The fastest growing must be the room air conditioners, followed by commercial refrigeration and commercial air conditioning.
Right. Sir, your margins have improved. They've come in close to 7% in this quarter. Margin expansion can be expected from your stable over the next few quarters?
So we attribute that to the product portfolio rationalization. We repositioned our room air conditioning offerings to address affordable segment as well as affordable premium segments. And the margin guidelines have been for segment 1, it is 7 to 7.5%, segment 2, 8 to 8.5%. The margin is also improving due to scale as well as localization. You are aware that we have set up a factory in Sri City. We have for the room air conditioners. We have also set up a factory for deep freezers in Wada, in Maharashtra.
Your profitability has jumped significantly. I mean, close to 100 odd crores from 60 crores that we've seen in the same quarter last year. Were there any exceptional items? Was there anything in that number that includes maybe other income that has led to such a massive pump up, sir?
No, there is no other exceptional items out there other than what is disclosed. It is purely due to scale and the profit improvement or the margin expansion that has happened there.
Wow, that's amazing. Also, talk to me about expansion plans. I know that you are aggressively looking to build your manufacturing units, play the indigenization game. Bring us up to speed with that. In September, you also had a QIP approval to raise about 1,000 odd crores. So where is all that money going to go?
The CapEx is primarily in manufacturing, followed by R&D, followed by digitalization. As far as manufacturing is concerned, we have gone ahead with the phase 2 of Sri City. Sri City project has a total capacity of 1.2 million. It is in modules of 300,000 each. So last year we commissioned 3 lakhs. This year we will end up commissioning, in FY25, we will end up commissioning another 3 lakh units and thereafter another 3 lakh units. So that's how the expansion will take place. In other words, it's a modular factory. In Wada, where we have gone ahead with the expansion of deep freezers in sub 300 liter range, which will be indigenously manufactured and will be available in the market from next month onwards. Commercial air conditioning, there is an expansion that is planned for both domestic as well as international markets. In research and development, because we are indigenizing, because there are many regulations that are in the offing, like energy efficiency or refrigerant migration, and new products that are to be developed for international markets, where we have great interest in the years ahead, that will be a significant capex that will be going in. And digitalization, because in air conditioners today, it's close to 25% are electronics. So there are electronics digitalization that is happening in the products, as well as for improving the customer experience. So in our operations and for both for financial controls as well as customer experience, we are investing in quite a bit of digital initiatives, which includes analytics today. We will be moving ahead with AI and machine learning, so on and so forth.
Very lastly, sir, debt on your books, I think that was a little bit of a concern, which was fairly elevated at least a few months ago. Any plans to retire debt on the books to lower that number and to improve the debt equity ratio?
We have lowered through when the QIP was completed. We have gone ahead and reduced debt. As of 31st December, we have surplus cash in hand.
Okay, that's fantastic to hear. So clearly expansion plans on track. Numbers are looking good. Cash on the books is looking healthy. No wonder Bluestar trades at its day's high point as we speak to you. So Thiagarajan, thanks a ton. Great having you today on the show. That was everything we needed to know about Bluestar. Growing faster than the industry, 25% growth on top line. Management believes they will improve margins as well. Product mix has been feasible. They've managed to ensure product and operational efficiency. And more importantly, have reduced debt and are sitting on surplus cash for Bluestar. With that, I'm going to move on to Sula Vineyards. That's the stock, Tamanna, that's been in the news.
Absolutely. I thought what's interesting also about Bluestar is how the prediction is of a better summer. That
Hotter
means a really
summer.
hot summer. But not such a hot start for Sula Vineyards. In fact, SAR trade, it's cracked over 6% as 12% of equity or 1 crore shares have changed hands in 2 large trades. Mahima joining in with more details on this. Mahima, what do we know so far?
Right, Tamanna, so as you rightly mentioned, 2 large trades have taken place and 12% of equity has changed their hands. Now this is worth 586 crores, which is huge for Sula. The term sheet suggests that the major investor, that is World Invest Asia, has completely parred with its stake of 8.34%. However, since 12% equity have changed hands, the rest equity were yet to figure out who the sellers are. However, if we talk about the major shareholders, HDFC large cap and mid cap holds around 9.5%, Goldman Sachs and SBI fund hold around 3.5 and 3.3%, and Quant Mutual Fund also holds around 4.3%. So by the end of the day, we'll know that the remaining 4% stake is sold by which of these investors.
Yeah, absolutely. For now, of course, Sula feeling the pain over there of that block deal. Just a quick look at how markets are doing, and very tepid and I would say range-bound kind of a day. IT stocks are not having a very great day. Nifty IT also cracking. Let's pull up the top losers from the Nifty IT. Realty, another sector which is seeing a bit of pain today on the market's view. On the other hand, you have spots of brightness just in some of that pack, and really public sector enterprises are the ones who are having a good day today in trade, perhaps with stocks like SJVN, Thiagarajan, etc. really pushing up that entire index. Even NHPC not having a bad day at all in a market which is otherwise quite range bound, to be honest. NHPC up about 5%. We'll take a very short break, but when we come back, we're talking about SpiceJet and the ambition of Mr. Ajay Singh to take over Go while getting his own house in order. Is India ready for an airline revival? We've never seen one yet. If you rule out Air India, which took decades, can SpiceJet actually step in and revive Go? All of that and more on the other side. Welcome back. You're watching India Market Open, and all focus this morning also on Spice. Now, for a few days, it's been very clear that Ajay Singh, the MD of SpiceJet, wants to bid for Go in his personal capacity. But on Friday, in a press release, the company also clarified that if their bid does go through, by the way, Ajay Singh is doing this with Busy Bee, if the bid does go through, SpiceJet will have a role in operations, extending expertise, etc. Now, the question is that a good idea for SpiceJet, which is in the process of fund infusion itself? Can Go actually be revived? Mayur Milak, Senior Vice President, Research, Auto and Aviation Asian Markets, with us on the show. I'm also speaking with Jitendra Bhargava, former ED of Air India, an aviation expert and the author of The Descent of Air India. Mr. Bhargava, let me begin with you, because the only sort of example of revival, and I wouldn't even call it revival, would be an Air India that after decades found the Tatas to come and take it up. Do you think that this Ajay Singh Go plan can work out?
Certainly not, is my opinion. And Air India is not a comparable issue, because Air India got into Tata's, which is a financially rich organization, whereas in the case of SpiceJet, what we are trying to get with Go First are two financially weak airlines trying to get together, and it can never give a strong airline. The other aspect is that Ajay Singh wants to get into in a personal capacity. Then they've gone ahead and said that they'll bring synergy with SpiceJet. It's a major issue on corporate governance as well. How can you saddle a listed company like SpiceJet with something that Go First gets into it? This may be Ajay Singh's personal opinion that it will give synergy to SpiceJet and it will lead further. The reality is, Go First at this moment, 9 months after the suspended operations, has nothing really to offer. Let's also not overlook the fact that SpiceJet commanded 15% plus of market share in the domestic market, and it's gradually come down to 5%. So if Ajay Singh really wants to revive, he must concentrate on reviving SpiceJet rather than get Go First. And the question somebody needs to ask Ajay Singh is, what are you planning to get? Aircraft are under lease, which he can lease from anybody as long as he has the money. Pilots are no longer available. There is no market share of Go First at the moment, and there are only liabilities available. So where is the positives that one can derive out of Go First, unless, of course, one says that there will be some taxation benefit that can come. The emergency credit line money that was to be given, Go First is availed almost all of the 1,400 crores that they were eligible for. So I just don't see why Ajay Singh is bidding for it, number one. Right. Number 2 point is, if Ajay Singh really felt that Go First would add value to SpiceJet, why did he not look in the month of May, June, July, and the professional resolution professional has been extending deadline time and again. So what is he going to get out of it? As a listed company, Ajay Singh may be applying it in an individual capacity, but he needs to put it in public domain. Right. After all, you can't. No, so
he has gone ahead and bid in his individual capacity, but he has talked about synergies with Spice. Hence the question. Now, talking about what Go has to offer, a debt of 6,521 crores that it owes its creditors. Mayur Milak, I want to understand from a Spice perspective, because it is the listed stock over here. It's in the process of fund infusion. About 700 crores has already been infused. They're going to raise more money. QIP is in the picture. Is the addition of Go, if it does happen, an asset or a liability?
Yeah, I see. Officially, we do not have a coverage on SpiceJet, so I will not be able to recommend a buy or sell on it. But having said that, I completely agree with Mr. Bhargava. I think I'm quite surprised that, at one point you are not self-sufficient. And at a point when you are trying to revive your own business, you're trying to look at somebody who's even weaker than you. So I completely, go with the view that two weak players can never make a great market. In fact, for a good long time, investors have been skeptical whether SpiceJet by itself will survive this game or not. And at a time when, they haven't even raised money, they have not been able to pay off all the dues, the liabilities are pending. You're trying to tell us again that, I'm looking at another acquisition. And again, as rightly pointed, I still don't know what are you really acquiring, because the company doesn't have assets. They were all leased aircraft which have gone. the pilots are gone, the slots are not available. So practically, I think other than getting the data of, go ahead of which were the routes, how were they operating, which routes were profitable, I don't even understand why somebody would want to look at go ahead as a revival, segment.
Speaking of that, Mayur, since you don't have specific coverage on SPICE, but you do cover the aviation pack, I want to understand where a SPICE fits in the larger picture, in what is becoming a more and more dominated market. And between your Tata group of companies or airlines and Indigo, you're probably going to see a duopoly with Indigo in the lion's share. Where does a SPICE even fit in, or even a Go if it revives?
So I think this is a good point here. So you understand about 60% is with Indigo, about 28% is controlled by Tatas. So yes, we've always been a 3-4 player market. This time now you have Akasa, which has about 4.5%, and you have SpiceJet, which has about 5.5%. So that's how the whole industry stands at this point in time, right? I think looking at profitability, one good thing that the Indian skies have actually witnessed post-COVID is the discipline in pricing. So despite your crude prices going up and coming off, we haven't seen any player really playing dirty because of their weak balance sheet, which has actually helped them make decent profits in the last 2 quarters. We've seen Indigo report almost 3,000 crore in 2 quarters. I mean, there was a time 2 years, 3 years back when their entire year profit used to be at 2,000 crore. This is a time when quarterly they are making about 2,000 crore. So times have changed, yes. Things have been good for the industry. So I think if they play a game decently at their level, I still think they can make money at 5%, 6% market share. It is a good game to look at. But I'm not too sure whether this is really the right step at this point in time. I think their first choice of thought process should have been that you raise your money, you get your balance sheet right, get all your act right. Once you start making decent money, maybe for a couple of years, then maybe you would want to look at that, an aggressive expansion plan. So I'm not sure about the timing of this move.
Timing is the big question. Jitendra Bhargava, just the overview on the sector, since we're speaking. So both of you concur that any kind of attempt to take over Go is a bad idea. It has nothing in it as far as SPICE is concerned. Is there a chance that there will be another contender? And will we continue to see this extreme dominance of an Interglobe or an Indigo right now in the Indian aviation space? Where does that leave a SpiceJet or even an Akasa?
Very right. Considering the dominance of Indigo and Tata Group Airlines consolidation, Akasa is on a firmer ground than SpiceJet at the moment. So this is why it belies kind of a thing that what is SpiceJet aiming at? As a businessman, I can't really say that Ajay Singh will be foolhardy in bidding for it. He perhaps sees something that we are overlooking. Say, for example, 100+ aircraft ordered on Airbus from Go First. Is he trying to wind that thing that, look, I've got the frozen price at a certain value that Go First to place orders. If I acquire Go First, probably I'll have access to those orders and get aircraft at a cheaper rate. One really doesn't know, because as on the operational aspect, one looks at it, there is just no merit in Ajay Singh, either in his individual capacity or with SpiceJet or with a non-entity like Busy Bee, putting in a bid. We see no reason for it. But then I've always believed that if there is a businessman and he's taking certain action, there must be some method in the madness. And what is that madness? We really do not know about it.
Let me take this opportunity to, a public request to Ajay Singh. Come, tell us, talk to us, and tell us what that method in the madness is. Not just SpiceJet shareholders, but I think anyone who tracks the sector will want to know what exactly you're seeing in Go and why the potential. Thank you so much to both of you for joining us on this section of the India Market Open. We'll take a very short break. We're going into that break with tepid markets. IT stocks showing, the pain this morning as a reality. On the upside, you have the broader indices behaving themselves, and public sector enterprises showing spots of green very selectively though. Short break here, but we're coming back with Talking Point. Stay tuned.